I struggled to use support and resistance. I took many losing trades, and I came to the conclusion that support and resistance by itself does not work. So in today's video, I'm going to be sharing with you guys a strategy that is 100 times better than support and resistance. And I can guarantee you by the time you're done with this video, you're going to have a new way of identifying strong areas of reversals in the market. But real quick, as always, if you guys do find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. But without further ado, let's hop into the video. All right, now the reason why basic support and resistance does not work is because many traders are going to see support and resistance at different areas. So I can guarantee you, if you've read any trading book or just watched any basic video on support and resistance, pretty much what we're doing is we're taking a line and we're going to draw it somewhere on the chart where the most amount of points hit. Now, the thing is about support and resistance, it's very subjective because some traders might say that we have a support/resistance area here. Some might say that we have it here, or maybe another trader sees it slightly lower down here. So to me, it's way too subjective because not all traders are going to see these support and resistance areas at the same point. So that's why I'm not a huge fan of just drawing basic support and resistance areas. To me, honestly, support and resistance is a very newbie strategy, and in my opinion, it just does not work. However, a strategy for me that really works in the market and helps me identify the strongest areas of key reversal points is going to be through the use of supply and demand. Now, with supply and demand, it has a very specific criteria, which is why it's not as subjective as support and resistance. I'm going to show you guys how to draw it here in a second. But essentially, what we're going to be doing with supply and demand is identifying areas of unfilled buy and sell orders compared to basic support and resistance areas where we're just trying to find points that prices hit the most and simply just drawing a line through it and waiting for price to trade to it again. I like to identify where these key areas are of unfilled buy and sell orders. Okay, so what is a supply zone or what is a demand zone? So a supply zone is going to be an area of unfilled sell orders. So essentially, let's just pretend that you're trying to go short 100,000 ES contracts and say like you're trying to short in this area right here. Well, you can't market order these 100,000 contracts because price is going to move way too quick away from your area. So if you're trying to sell short 100,000 ES contracts and price very quickly moves away from your average, what are you going to do? You're going to leave your sell orders sitting at this area and wait for price to trade back up into it, fill the rest, and then see if price drops from there. That's exactly what a supply zone is. We're trying to identify the points in price action where these large sell orders were not filled, wait for price to trade back up into them, look for bearish price action when we get into the area, look to get short where they stop right above the supply zone. Now, on the flip side, we have demand zones, which are going to be unfilled buy orders. So again, say the same scenario, but this time you're trying to buy 100,000 ES contracts long. Say price moves too quickly away from where you're trying to buy, you're going to leave your orders sitting there waiting to get filled, wait for price to trade back into it, fill the orders, and look for price to go back up. So when we are using our demand zones, we are looking for price to trade back down into the area of unfilled buy orders, look for bullish price action as those orders get filled, look for longs or look for calls to take price back up. So now how do we actually plot these levels? Because again, there's a very specific criteria that you need to have to draw a demand zone or to draw a supply zone. And real quick, if you guys haven't already, I highly suggest checking out my book, The New Age of Day Trading, the Ultimate A through Z Trading Guide. 320 pages goes over my entire day trading strategy, the indicators I use, stop loss strategies, Fibonacci retracements, sniper entries, and so much more. So again, if you guys want to check it out, The New Age of Day Trading, the Ultimate A through Z Trading Guide, officially on Amazon. The link will be down in the description. So in order to draw a demand zone, what we are going to be looking for, first off, is going to be a very large green candle to the upside. It has to be a large green candle. Let's just give this thing a lower wick right here as well. Now, once you identify your large green candle, you want to look one candle to the left, and this candle needs to be a small red candle in correspondence to the size of the green candle. So let's just say that we have our red candle and it looks something like this. This is a small red candle next to a very large green candle. So essentially what this is telling us is anybody that was looking to get long in this area price moved too quickly to the upside, which as a result, there are unfilled buy orders sitting down in this demand zone. So what we are going to do to plot our area of demand is we are going to plot the lower wick of this green candle, or if the red candle's wick is lower, you'll simply just plot that instead. And then let's give a little upper wick to this red candle as well. But you're going to mark the lower wick of whichever one is lower, and then you're going to mark the upper wick as well as the open of the red candle. And simply what we are going to do is we're going to draw a rectangle from this lower wick to this upper wick right here. Now, the reason why you want to plot the upper wick and the open of the candle is because 95% of the time, that is where we are going to see a reaction when price trades back down into the demand zone. Now, what we are going to look for from here is for price to trade back down into the demand. We're going to look for bullish price action, ideally at the beginning of the wick or ideally at the beginning of the body. If we can get bullish price action and bullish volume, we are looking for longs as these unfilled buy orders are getting filled to take price back up. Now, I'll show you guys how to plot this on an actual chart here in a second, but that is how you plot your demand zones. Now, to plot your supply zones, it's going to be the same thing, but flipped upside down. So first, what we are going to look for is a large red candle to the downside. It has to be a red candle. Now from there, what we're going to do is we're going to look one candle to the left. And if this one candle to the left is a small green candle in correspondence to the red candle, this is going to be marked as a supply zone. Now, again, it depends on which wick is higher in this scenario. If the green candle's wick is higher, you're going to start your supply zone there. If the red candle's wick is higher, you're going to start your supply zone there. So let's just mark the top of this green candle and then the bottom of this green candle right here, as well as the open of the green candle right here. Then simply what we will do is we will mark the bottom wick right here to the upper wick and project it to the right. And now this is going to be our supply zone. Now again, 95% of the time, the reaction that we are going to see is going to be off the lower wick or off the open of the body. So what we are going to do from here is wait for price to trade back up into the beginning of the supply zone. Look for bearish price action at these two levels. If we can get the bearish price action and bearish volume letting us know that sell orders are being filled, we will then look for a short entry to take price back down. So now let me show you how to actually plot these on your chart. All right, so now the way that I go about plotting my supply and demand zones is I'll typically start on the weekly time frame. So actually there's like a really good example that we can use. So we can see on the weekly time frame right here, we have a very strong move to the upside, and then next to it, a small red candle. So what does this tell us? This is an area of unfilled buy orders based off the weekly time frame. So what are we going to do? We are going to mark the lower portion of this green candle because the wick is lower. Then we're going to mark the open of this red candle right here. And then we are going to mark the upper portion of this red candle right here. And notice what we bounced off of for multiple weeks in a row. The beginning of the demand, the body of the demand, literally to a point. The beginning of the demand, the body right here, a little deeper right here. And now we're just filling even more orders within this demand area. So I'll start on the weekly time frame, identify any areas of supply and demand, and then from there, I'll break it down to a daily. Now, if we're looking at the daily, we had a daily demand right here before price got very, very close and then bouncing back to the upside, eventually taking it out after that. But after the daily, I'll then break it down to a 4-hour. Now on the 4-hour, we actually have a lot of different areas of supply and demand. We had one right here that we went right up into, ended up hitting it, rejecting and rolling over. So here's our previous supply zone. Again, we would start at this upper wick right here on the red candle because it's the highest, take it to the lower wick of the green candle. And what do we notice? Price trades up into it, rejects it, comes back down. We also had another one slightly below that right there. Obviously, we just ended up taking it out and going up into this supply zone. We actually even tagged the supply zone right here as well. So after I'm done on the 4-hour, I'll then go to the 3-hour. We have a very small 3-hour supply zone all the way up here. So if ES traded back up into it, I would definitely be interested in trying to short. We also had a 3-hour demand over here. So we're going to take the lower wick just because it's lower than the red wick. And then we're going to take it to the upper red wick right there, project it to the right. What did we bounce? Literally the beginning of that demand zone before rallying back up. And then we have this 3-hour supply zone right here. We're going to take it from the upper green wick to the lower green wick, project it to the right, Notice what happened. Again, we bounced right off the 3-hour demand, went right up into 3-hour supply, rejected it, and straight back down. Once I plot these areas on the 3-hour, I'll then break it down to a 2-hour. So we actually have a 2-hour zone right here, which we got very close before we ended up rejecting. We have a 2-hour zone right here. We have another 2-hour zone way up here, another 2-hour zone right here, another one right here, and then we even have another one over here. Again, a supply zone. So once I plot my levels on the 2-hour, I'll then break it down to a 1-hour. So we had a 1-hour supply zone right here. We have another 1-hour supply zone right there. Another 1-hour supply zone right there. Actually, we have a new 1-hour demand right here that I would actually be interested in tomorrow. But again, we're going to take the lower wick right there to the upper wick right there, project it to the right. And what I'm going to wait for is for price to trade back down into it. Look for bullish price action at the beginning of the zone. Look to get long, take price back up. Then once I'm done on the 1-hour, I'll finally break it down to a 30-minute and a 45-minute. So there was a 30-minute supply zone right here that we ended up rejecting off of the other day. Go to the 45-minute. We have a 45-minute supply right here. And then we have another one all the way back up here that I would absolutely be interested in if we got up into to look for a reject. Now with supply and demand, what you want to make sure of is when we actually take out the zones, meaning like I said, we have like that 1-hour demand zone down here now. So if price were to trade back down into this 1-hour demand, it was somewhere down here. But if it traded back down into it and took it out and filled all the orders, the demand zone is no longer valid. You would simply delete it off your screen. Demand does not turn into supply, and supply does not turn into demand. So if we traded back up into this supply zone over here and we took it out, I'm deleting it because there's no longer unfilled sell orders right here. They all got filled. The zone is invalid. But that is going to wrap up this video on why you should not be using basic support and resistance. Again, that stuff is very subjective and 99% of the time it does not work. Supply and demand, what we are doing is finding unfilled buy or sell orders in the market from large traders or large institutions, waiting for price to trade up into the areas, look for confirming price action and confirming volume to let us know that that zone is truly valid, and take the trade and use proper risk management. So if you guys did find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. Make sure to tune in every Tuesday and Thursday where I do live day trading here on this channel. Everybody have an amazing rest of your day, and I'll see you guys in the next video.